All right, let's get started here, everybody. Let's rock and roll. Thank you for everybody joining on the call here to learn a little bit about why Lending Heights. I'm excited to go over this with people, just to deep dive into what we've built over here. I think we have something really special. We talked to a lot of different loan officers, and I'm really starting to see a trend where, we're onto something here. Our model is the emerging model coming up in the industry. It's not the antiquated models that are out there from, original legacy bankers or brokers to, retail lenders and all that stuff. We kind of have a good blend in between. So let me just start off from the beginning. Let me introduce myself. My name is Jason Checo. I am the president here at Lending Heights Mortgage Company. I launched this company in 2015, myself and one other partner. Little backstory, I moved from the Philadelphia area of Pennsylvania to the Pittsburgh area, which is about a 5-hour commute, both sides of the state. When I came here, this is when I opened up the company. And right off the bat, I jumped in and, I really built something special. Was able to build a $50 million book of business. So I have a lot of experience originating. I'm not just a, just a CEO, or I'm not just on the president side of things. I was in the weeds, and I still keep myself in the weeds a lot. And it's very important to me to go in and, talk to originators, talk to the ops. And there's not a part of this company that I can't do myself or understand complete of how the process gets done, so that we can constantly get it better, make it better for the originator, and make it cheaper, better for the client across the board as well. My background, I have an engineering background, so little look inside my head here is that I'm always constantly trying to find better ways to improve the loan manufacturing process, better ways to improve the sales process, better ways to make loan officers champions. And that brings me to my next point, just to show that we realize that loan officers are the stallions of a company, right? They're the ones that are pulling the company forward. They're the ones that they're the driving force behind everything, keeping it going. So my focus is always to make the process better, faster, and cheaper for the loan officer. When I gave up that book of business, the $50 million book of business that I had, that I created, I realized that my new client isn't the real estate agent. My new client isn't the actual, person taking out the loan. It's the loan officer. As long as I keep loan officers happy, we're going to have a very successful business. And I treat loan officers as if they are my client, because and no company out there will admit this, but loan officers, we're renting their business at the end of the day. When a loan officer comes over here with a referral book of business, that's their book of business. And we have to do whatever we can, call them our client, keep our client happy, so that they stay with us. We give them the best pay, the best comp, and the best mix of everything, so they can go out and thrive and do what they're best at, is sales and doing loan officer things. And we can thrive as an organization and as a company all together. So we're very LO focused, and I'm very passionate about this industry across the board. So let me dive into what makes us special and what gives our loan officers the edge of everything that we have here. So we work off of a hybrid model, and this is a true hybrid model that was built from the ground up to be a hybrid model, not a brokering model that tries to bank, not a banking model that tries to pepper in brokering here and there to try to catch up with the times. But we've built this so it's a platform for loan officers to be able to come in and have the same experience, the same compensation, and the same process for whatever loan type they're trying to do. If it's a loan that we fund ourselves, if it's a loan that we broker out, that's a fringe loan to an investor we have never used before, or if it's just a standard FHA conventional, whatever it happens to be, same user experience for the loan officer. And that's both in interface, and that's both in operations and client experience across the board. So let me dive into that a little bit more to explain what it is. We do operate in the non-delegated space, so we don't underwrite in-house, but that's one of our strengths. Contrary to popular belief, a lot of people have been told you have to be able to underwrite in-house to be able to have any control. It's actually quite the opposite, and I'll elaborate that a little bit here. We have optionality. So our wholesale lenders, our non-delegated core lenders, our partners that we call them, because that's all we partner with, are companies that are willing to actually partner with us, not just take our loans and run with them. They're competing for our business day in and day out. So at any given point, if one of our lenders decides, hey, margins need to go up, interest rates need to be bad today, we have another 29 behind them, ready to rock and roll and take our business and go. So in a normal legacy retail model, if today your 30-year fixed rates come out and they're higher than market and you're being outpriced, what options do you really have? There aren't many. You have to just sell through it. And all your managers are going to tell you, sell through it. And of course, most good loan officers out there are selling service, but let's be honest, in this market, you need to have both. You need to be sharp in every way, shape, and form. Clients are becoming more informed. Clients are starting to go out there and shop around. When they start seeing 6 and 7% on an interest rate, and they start seeing payments in the 3,000s and they're expecting 2,000s, they're going to do what's best for their family at the end of the day. So yes, you can offer great service, but why not be able to offer both? that farce idea of you can only do either or is true to an extent, but there's a lot of companies that are bloated where you can actually trim down the cost a lot more and still offer the same or better service across the board. So, and we've done this through technology. We're very technology focused. We'll go through our platform a little bit down the line, but a lot of these legacy programs that are out there, it surprises me that they're still operating. Anybody that's been in these legacy models knows sometimes it's like you're working off MS-DOS, and let's be honest, they can be a little clunky across the board. So our hybrid model, like I said, was designed and it's changing every single day so that it's best for both worlds, and it's built that way, not just throwing band-aids across the board to try to make things kind of work or try to make it seem and look like we're working in one capacity but actually doing something else. All right, cool. Quick comparison, right? So our hybrid model has put together the best of both worlds, the traditional broker model and the traditional retail model. We've combined them to benefit both. So let's kind of elaborate and break these details down here for you. So I'm just going to go through this list, but there's a lot more, but this is kind of maybe what everyone understands from the top. So free in-house marketing department, right? We were a small broker shop at one point, and it's hard to have those types of things, right? You need to have people on staff, be able to staff and pay for those types of things. We're at the good size where we do have in-house marketing. We have somebody available to make presentations for you. We have somebody available to make bespoke flyers, business cards, any type of swag that you possibly want. We will design that all in-house. The kicker to all that is we don't need to charge you a monthly fee. We don't need to build into our contracts to say, hey, look at this amazing benefit we're giving you. We're giving you a $1,000 a month free marketing allowance. We don't play those farce games. It's you get free marketing here at Lending Heights. Anything that you need, it's there. Any design work you need, it's there. Flyers, social media, swag, like all those different types of things, it's there. We'll design it for you free here in-house, and you don't have to get charged for it. Social media marketing and social media management. We have platforms that you can go in there and spend about 15 minutes one day, so it posts for the rest of the month for you. We have endless amounts of pre-built flyers for you to ready to rock and roll, and these are bespoke built flyers, not just some templates that are out there across the board. So we offer that in our shop, but also give you traditional stuff as, like I said, as a broker shop and wholesale side of things as well, which I'll get there. Custom personal brand. We don't need you out there yelling from the hilltops, hey, I'm selling Lending Heights, I'm selling Lending Heights. I mentioned this before and I'll hit on it again. The loan officer is the talent here. The loan officer is the one that's built that referral book of business, and they're the ones that have built those relationships. Push your brand. I don't care that you have your brand. I don't care you don't say Lending Heights. I care that you look great and you do an amazing job for the client, because at the end of the day, the company does. So we push hard for that. We don't need you outselling our national brand. We need you outselling your brand. We have full IT support, so you're not on your own, right? You don't have to worry about fiddling with your own computer, calling somebody and saying, hey, how do I download the software, do whatever? It's there. We have it backed up. We're good to go. IT's in-house. In-house processing, LOA, lock desk, closing department. We do as much as we possibly can here in-house. We control a big portion of it. When I mentioned, we actually have an LOA for you. You're not ordering appraisals. You're not managing real estate documents. You're not uploading documents to a portal. You're not doing all types of things. You're worried about sales. Our process, which we call our hype process here, again, I'll talk about that in a minute here down the line, is on point and going, so we control everything in-house. Retail does have those types of things, but sometimes it's too bloated. Sometimes you have to go above and beyond and go to a manager to get an answer. Here, you're direct to everything. Appraisal control. Benefit of where we sit in our space in our hybrid model. On the traditional broker side, you have to use the AMCs that the lenders provide you. On the retail side, you can have panels and things of that sort. We can do it all here in-house. We figured out a way to be able to do full appraisal control, to be able to have our own panels, to be able to use AMCs, have it different in areas. If you specific state or different market has a different need or necessity, we can do it. This is where we really start to flourish. So like I said before, we do the best of both worlds. We have the retail side and we have the broker side pushed together into one spot. 1,500 plus mortgage products. Now, not only do we have 1,500 mortgage products, we have 1,500 mortgage products that we do well. A bank statement program to one investor is treated as the same as a conventional 30-year fix with another investor, which is treated the same as an FHA with another lender and investor. It's all the same. The amount of products that we have available gives loan officer the optionality to be able to write more loans, get more commission checks, build a bigger book of business, and really get their name out there. We have no overlays. So I get this one all the time when I'm speaking to specifically people at retail shops. We have zero overlays. We underwrite just the guidelines. Then we drill into it. I say, well, what about like an FHA 580 below 580? Well, we do have this one little guideline. Okay, what about this little thing on conventional? Yeah, we have this, but so we're discussing overlays at this point. Our investors, right to overlay, right to guidelines with zero overlays. And let me express why. So again, I'm just picking on retail a little bit here, but let me just give you an example of how it works. Some of our investors and a lot of our investors are the same size, if not bigger, than biggest retail banks out there. We have one investor out there that's the biggest lender in the country that you may or may not have heard of. They probably do 10 times the business as the next closest retail lender. So they have the best relationship with Fannie and Freddie. They're Fannie and Freddie's biggest client at the end of the day. So when they say no overlays, they mean no overlays. If it shows up in the guidelines, it's acceptable. There's nothing above and beyond that to say, oh, well, this little thing we're not going to do, or we don't want to, a little letter of explanation for this, whatever it happens to be. So we write the guidelines on all product sets, FHA, conventional, anything across the board. No commission caps. Our comp is extremely strong. So let me ask you this. I was talking to a retail loan officer the other day, and they said, hey, I'm doing so good right now. Our rates are pretty sharp. You guys' rates aren't that much better. And we did a comparison side by side. This person is a very productive loan officer. They did about $6 million in locks the month before. I asked, okay, great. Where are you at? I got a $4,500 cap on all my commissions. We did the math backwards. You just told me we're selling the same rates. Ours is not. You were making 120 basis points on every single one of those loans in this scenario without a cap. And he's out there bragging about doing $6 million at a $4,500 cap. The amount of money this loan officer could have made was 5x what he was making currently because he was larger loan sizes. He was hitting his cap on the majority of those. No commission caps. Commission caps aren't necessary, or small commission caps aren't necessary for big markets. Jumbo loans, that's a whole other situation. Once you get to that realm, it's another set of guidelines, another set of secondary markets. It can get a little competitive. But at the end of the day, throw away those commission caps. Don't be sold that you have to have a commission cap to have strong pricing and to be competitive in a market. That's just not true. That's just your manager trying to tell you that, because there's probably 3 or 4 different layers above and beyond that telling them, hey, I need to get paid on this loan. I need to have my hand in this cookie jar. I need to have my hand in this cookie jar. Oh, and here's the LO. Put a cap on them. Our technology and our structure here, again, we've been built from the ground up to be this hybrid model that runs lean and just as efficient as all the biggest and best companies out there. We allow monthly comp changes, so you can change your comp month to month to stay competitive. LO database ownership, it's your loans. We understand that. We know it's your clients, it's your database. You bring it to us, we're going to try to steal it and keep it here, right? That's your database. We understand that. We're not saying every single one of these loans coming in is a Lending Heights loan. We let you do your database ownership, and we don't force you to say they are our loans. We'll talk about our web-based platform. It's our HITE platform. It's an acronym for here. It's the easiest, HITE. It's web-based. It's amazing software, side-by-side, dual AUS, running credit, sending out pre-approvals. Real estate agents can see everything from there. It's good to go. And then a repeatable borrower experience. Like I said before, retail is really good at that. Hats off to them. They've built a streamlined process. On our traditional broker side, I've seen that before where it's hard, because you're using different lenders and things like that. It can be a little difficult. And then the repeatable borrower experience on our side, as I mentioned before, it's one and done. You're in it. You're ready to rock and roll. It's one platform, one experience, and set it and forget it. Let's look at costs, right? I hit on this a little bit before. Why is it expensive, or what's the word bloat, or why are margins getting thin, and why are margins getting compressed, or why are we putting caps on our margins or on your LO comp at these various lenders? Well, this is the reason why. This is just honest truth. So you can see on the left-hand side, it's a little diagram what we have broken down. Let's focus on the right. A lot of times, loan officers in the retail positions are, making, 50, 75, 120 basis points, something around there. But then on top of that, you're going to have your local branch manager. You might have a local sales manager. You might have a state or regional sales manager. You might have a national sales manager. Let's be honest here. Let's be transparent. How do you think they're all being paid? It's coming right out of your commissions. It's coming out of the whole loan. Everyone has to have their hand in their cookie jar. So what they're saying is, now that they have to pay all the salespeople, they still have to pay for ops. They got to worry about all that other fancy stuff they're giving you, and then everything that's on top of that, all the underwriters and things of that sort. And then they got to worry about profitability on top of that, right? So you see that there's a lot of extra hands in the cookie jars when it does work in the sense, but at the end of the day, it's an antiquated, it's an old model, right? You don't need all those extra layers to make anything work. On our side, lion's share goes to the LO, right? We have small corporate margins on top of it. We have recruiting bonuses on top of it, people that bring people in, and we're, this kind of segues into that. We're very transparent about what is being spent on every single loan, where all the money goes, and what it's spent on. So Lion's share goes back to the LO because, like I said before, the LO is the talent here. They're the ones that are doing all the hard work in the job, and they should be getting the lion's share of the money across the board. So let's talk about our process. We call it our hype process here, and okay, we're paying LOs all this. How do we get anything done? Well, we share the risk with our wholesale investors. That's what it comes down to at the end of the day. You have to realize that all the underwriters on our files, we are that underwriter's client. They're not our coworker. I'll ask you this question. If you're at lunch, someone calls you, your coworker calls you, or your client calls you, which one are you calling back first? You're calling your client back first all day. So our approval process, our underwriting, our processing, everything is on point so that the LO has the best experience possible. So a little look into it. Our initial disclosures are set, and let me take a step back. The process we designed is set it and forget it for loan officers. Loan officer walks in and goes, hey, here's my loan. They drop it in. They prep the file for disclosures, make sure everything looks good, make sure they have the right product selected, make sure the loan qualifies. Once they push it off, our team picks it up and runs it. Disclosures are getting set in their behalf in about 43 minutes. LOs aren't sitting there and worrying about, okay, is this going to be a tolerance cure? Do I have to add this? Do I not? Our disclosure desk does that. They're fully transparent. And they're disclosing what you put on your LE or you put on your fee sheets. You're not getting it sent in and then all of a sudden it's $10,000 more to close, or we have to add this just to be safe. That stuff doesn't exist. Sure, they'll catch any big mistakes like, hey, you forgot to put transfer tax on here. You didn't disclose a appraisal cost or whatever it happens to be. But at the end of the day, because we have that vetting process, you're not responsible for tolerance cures. We get disclosures out on average in 43 minutes, and it's hands off for the loan officer. Underwriter approvals are happening in 24 hours. Docs out prior to close. Me having the engineering background, I really look into I like these numbers. Docs out prior to close, meaning we have fully signable packages with Altas out to real estate agents on average 3.4 days prior to the actual scheduled closing date. That's almost, and that's not business days, it's calendar days out to the client. So 3 days, you already have packages going, ready to sign. Everyone's sitting around twiddling their thumbs. Okay, in 3 days, we can get this thing closed and go. And clear close taking about 17 days. Like I said, we kind of talked about it's a repeatable borrower process, for everybody. So we're on fire when it comes to our ops, and that's what it is. We can put all our money on the sales side of ops and not have to worry about the compliance or the underwriting side of ops. We don't have to worry about underwriting and have to do all those types of things. We send it out to our investors. They underwrite it. We're a big enough company that we have turn times negotiated with them that they'll turn around certain times. You can pick up the phone, talk to the underwriter directly if there's a problem. But our system is designed and our process is designed around the loan officer so that loan officer submits a file, not stacks, but submits a file for underwriting. It gets disclosed. The processors will collect any documents that are necessary that aren't already in the file. They'll do all third-party stuff. Our LOA is ordering appraisals. You don't have to worry about managing an appraisal order. Talking to real estate agents for any additional docs, addendums, things of that sort. Submitting for underwriting, chasing steps at approval, chasing down the client to get documents in. Worrying about initial closing disclosures going out, worrying about packages going out in time. Our ops team picks it up, runs with it, and ask any of our loan officers here. You can trust them, and they do an amazing job. All right, cool. So kind of hit on this before, but the hybrid model is what makes us unique. We sit in a little space. Why haven't you heard of us? Why does it sound too good to be true? Well, let me talk to you about a little company called Blockbuster. Blockbuster was the standard. They were a giant. It's the name that everybody knew, and that was the experience that everybody was expected to do and how you did it. You walked in, you got a tape, you walked up, you rented it, you walked out and had to return it, rewind it, all that nostalgic stuff that you've done. The reason why we're the next best thing you haven't heard about is because we are unique. We're the Netflix of the industry right now, up and coming. And sure, there might be some other companies having the same model as us, but we're dominating this. So we offer the wholesale rates, the wholesale products as brokers, support as a retail lender, meaning we have all the internal stuff done for you. Everything is modern and new. We're not working off of long legacy products like Encompass or Calyx or PC Builder or anything. That's it. Every single thing is web-based here. You can originate from a phone or a tablet, and you can do it efficiently, not just for show and cheeky say, look, I can see my login screen from my cell phone. No, you can take full applications. You can run AUS. You can run credit reports. You can shoot out cost sheets. You can shoot out pre-approvals, everything all from one space. And I'll talk a little bit about that in the future here. And then the optionality of being a wholesale lender, 1,500 plus product set. It's all out there. There's a lot of different products available. And we do it, like I said, it makes us unique is that we do them all the same or you have the same experience across the board. All right, cool. A little bit into our Hype platform. It's our LOS, our POS, our CRM, and PPE. That's all mortgage acronyms I'm sure everybody is fully aware of here. But again, all of it's mobile. It has a realtor component to it as well, meaning that real estate agents can go in and they can upload to our files. They can see updates on our files. They can actually generate their own pre-approvals from our files. You can set limits and say max DTI, max loan amount, max monthly payment. And they can go in there and say, all right, I'm at open house, or I'm putting an offer in, and I need a pre-approval for 350,000. I need a pre-approval for 351,000. And I need a pre-approval for 353,000. Instead of bothering the loan officer, they can go right into the portal and push that. Now, say when it gets to 360,000, it hits one of those limits that you put in place. It's not going to let them generate, and then you're going to get an email saying, hey, Sue Casa real estate agent is trying to generate a pre-approval and they hit one of your limits. Please reach out and see if you can help them. That happens too. And then complete transparency. So we over communicate here too much. You know everything about your loan status the whole way. Everybody's involved. Everyone that's involved knows email updates, phone calls, everything across the board. We let you know about our cycle times all the time, what to expect. We let you know about pricing, why it's priced away. And the biggest thing I haven't talked about yet is that you can fact check us all day long because we're on the wholesale side. That means that you can go in there and pull down rate sheets directly from our investors and see raw rate sheets and compare it to what you're selling and know what our margin is in between. The fact check is exactly what we told you it was going to be. There's no hidden stuff. We don't need to work backwards and try to hide things and play those games. It's about being transparent. It's about being a platform for loan officers, not having loan officers as employees here. Again, some of the things we talked about before, the 100% free marketing. I don't want to touch too deep in this, but it's all there. You don't have to pay money for marketing. And let's talk about our culture real quick before we go. We've built our company off these 5 basic principles here. 1, team. Together, everybody achieves more. We are a very, very, very strong team mindset here. Everybody's a team member. They're not employees. They're not people that we work with. They're treated like family because it's the team that makes us different from everybody else. That's, at the end of the day, all of our loans are following most of the same guidelines. All of our loans are following a lot of the same product sets. It's about the execution and how it gets done, and our team is what makes that difference. It's about experience over everything, right? I mentioned before, loan officers are our client. We have to have an amazing experience. Your clients need to have an amazing experience. That's your real estate agents. That's your borrowers. Your referral partners all need to have an amazing experience. Super important to us. Internally, we own everything, right? We're thumb pointers, not finger pointers. We got to see at any given point, what did we do differently, or what could have we done differently in this situation to make sure that everybody had the best experience and the team worked well? What could I have done differently to make sure that this client could have got a better situation? What could I have done differently to make sure this loan would have got cleared to close 10 days early instead of 5 days early? So, we own it. It's us. We're relationship driven, not transaction driven, right? You're only as good as your last loan. So it's about the relationship at the end of the day. If we're just transactional, you don't have a long-term business. You won't be able to fight these waves that we're hitting in this industry with, when difficult times come. So we're relationship driven, and we understand that, it's about long-term, strong relationships versus just, hey, how much money can I get in this loan, making it closed? And then changes in our DNA. Anyone on this call that's been in this industry for a while knows the industry that we're in today, the market we're in today, is nothing like the market it was 6 months, 1 year, 2 years ago. Things are always changing. So we make sure we stay up with the times, and we constantly will be changing in the future moving forward so that we can keep crushing and keep dominating across the board. So I'm here to take any questions if anybody has any questions about anything, but feel free to reach out. Here's my information. I had a lot of stuff over this, the past 23 minutes here. So if you need anything, please let us know. We're happy to answer them. I'll wait a moment here to see if you have any questions.